So why form a Nevis LLC? First of all, establishing a limited liability company offshore can provide an additional layer of asset protection over U.S. LLCs. The island of Nevis in particular enacted favorable legislation laws in 1995. A U.S. person in turn can use a Nevis LLC to run a business in the United States or other country. It's just a matter of filing foreign qualification papers in the state or country where one wishes to operate. And more commonly, a member may want to use the company to hold a foreign bank or investment account to help protect the funds from domestic lawsuits. I've been in the company formation business well over a quarter century and set up my first Nevis LLC company for a client in 1994. I visited Nevis on several occasions and have had a personal visit in my U.S. office from the current premier of Nevis, that's the island's head of state, and our team has established several thousand Nevis corporations and LLCs. The Nevis legislature amended the ordinance in 2015, which tremendously increased the asset protection of a Nevis LLC. First of all, Nevis allows for single member limited liability companies. Nevis law also establishes a charging order lien as the creditor's exclusive remedy to attack a debtor's ownership interest in a Nevis LLC, even if it's a single member LLC. That is, someone with a judgment against the owner of a Nevis LLC cannot take the LLC nor the assets inside. Better yet, if a U.S. person or company has the charging order, the person holding the charging order is required to pay taxes on that member's portion of the profits that they made inside the company, whether they receive the distributions of that profit or not. And that's according to Revenue Ruling 77-137. This is because the one who has the right to receive the distributions is the one responsible for the tax bill, whether the profits are actually distributed or not. So one more time, yes, the one who sued you would now be responsible for paying your Nevis LLC tax bill, even if you decide not to make distributions to them from your company. Now, charging order liens in Nevis expire after 3 years and are not renewable. Nevis Limited Liability Company, a U.S. citizen transferring assets to an offshore single-member LLCs, does not trigger tax consequences that would normally be linked to the transfer of assets to other types of offshore entities. Nevis does not recognize foreign judgments. Management in our Nevis office knows of no case where a U.S. creditor has ever obtained a charging order lien through Nevis courts to enable them to enforce a judgment from the U.S. And it gets even better. The 2015 amendment reduced the fraudulent transfer statute of limitations in Nevis to only 2 years. That means once you transfer assets into a Nevis LLC, 2 years later, the courts will refuse to hear the case. And even better, the creditor must prove beyond a reasonable doubt that the debtor transferred the assets to a Nevis LLC to hinder or delay creditors. Informing the courts that you simply moved assets into the Nevis LLC to diversify internationally may cast enough reasonable doubt against fraudulent transfer accusations to keep creditors at bay. Moreover, the 2015 amendment makes a creditor post a $100,000 bond before filing legal documents to enforce a judgment against a Nevis LLC member. On the other hand, U.S. courts consistently hold that creditors can foreclose a debtor's interest in a single-member LLC through U.S. state court proceedings. U.S. LLCs have the charging order lien protection as well. However, the courts consistently break through the protection afforded by U.S. LLC statutes, not in Nevis. So how does this help in U.S. court? Additional amendments made in 2015 to the Nevis LLC statutes can be very beneficial to defend assets held therein from attacks in U.S. courts. The 2015 amendment to the Nevis LLC statutes possesses verbiage protecting members who have charging order liens on their interest in the company. That member's interest may be obtained by the other LLC members who do not have liens on their membership. For example, Let's suppose the company is owned by a husband, wife, and 2 children. The father gets a judgment against himself, and his interest in the LLC obtains a charging order. The wife or children can obtain his interest in the LLC free from the charging order. Alternatively, he can redeem his own interest in the LLC with other assets, including assets that are exempt from judgment creditors. In addition, new statutes provide that even if a member has a charging order, he can still contribute additional capital. Plus, if there are 2 or more members, the member that is free to make distributions may do so without the need to make distributions to the charged member that would result in seizure of that portion of the distribution. Now, 2 prior conditions have to do with inner workings of the LLC and its members. In just about all U.S. jurisdictions, issues having to do with intercompany matters and among the LLC members are regulated by the jurisdiction where the entity was formed and not where the owners live. Let's talk about Nevis LLC administration. A U.S. person operating in Nevis LLC may need to do a simple one-time filing of the IRS Form 8832, whereas by default, a U.S. member LLC receives sole proprietorship or disregarded entity tax treatment, and multi-member LLCs are taxed as partnerships for U.S. purposes. Offshore LLCs may need to file the 8832 form, so make sure to check with your CPA. As such, a Nevis LLC is considered tax neutral and should have no effect on taxation to the U.S. person. Nevertheless, so we don't appear to be giving tax advice, we do recommend consulting with a CPA who is experienced with offshore structures. Another nice feature of the Nevis LLC is that members or managers do not have to live in Nevis. For example, a manager of a Nevis LLC may be a member and may also be a debtor with a judgment against himself or herself. That person may live in the United States or in any other country around the globe. If someone has a judgment, that person can have a significant amount of control over the Nevis LLC, which can hold assets in any country. Now, the Nevis LLC can hold assets in the U.S., Nevis, or anywhere else. The Nevis LLC may have a bank account in California, Nevis, Switzerland, or elsewhere. Now, whereas it is possible, it is not optimal from an asset protection standpoint if a judgment debtor is also the manager of his own Nevis LLC. It's really better to appoint a manager who lives outside the U.S. since U.S. courts do not have jurisdiction over offshore LLC managers. A judge cannot successfully enforce an order for a foreign person to send the funds back to the U.S. So a properly drafted operating agreement will allow a judgment debtor to remove a foreign manager. Otherwise, a U.S. judge could order him to do so. Now, our Nevis affiliate organization is licensed and bonded from an insurance company to act in the best interest of clients. So if the assets have a 100% chance of being seized by a creditor if they remain in the U.S., 2 choices come to mind. Option 1 is to do nothing and let someone seize your hard-earned assets. And option 2 is to temporarily have a company take the reins that has gone through the intensive background checks necessary to obtain a license and whose actions are backed by an insurance company. In which scenario are the odds more in your favor? For those who do not have trusted friends or family members residing abroad, there are very reputable, long-standing trustee companies that have never taken a client's money that can step in as the initial co-managers or successor managers who can protect you when the bad thing happens. And we have relationships with those companies that can do that for you. Now, the ultimate asset protection arrangement involves an asset protection trust in Nevis or the more popular jurisdiction of the Cook Islands. In this arrangement, the trust holds all of the membership interest in the Nevis LLC. Now, the client and or his spouse is or are the beneficiaries of the trust and is the manager of the Nevis LLC. Now, the Nevis LLC, in turn, holds 1 or more bank accounts, investment accounts, and so on. The client is the signature on the accounts, and then when the bad thing happens, legally speaking, the trustee of the trust can step in as manager of the LLC, putting the client in a position of impossibility if a local judge orders him to repatriate the funds. There is no fraudulent transfer of assets when the position of manager changes from you to our law firm in the Cook Islands, for example, or Nevis, because there are no assets being transferred. Only a position of the company changes. That is the manager of the LLC. Now, when choosing a trustee, it is important to make sure that it is someone you can trust. If the trustee has a license in Nevis or the Cook Islands, you can rest assured that the government has run significant background checks on its officers, directors, and owners. In addition, the trust companies are regularly audited and scrutinized by their local regulators. Because of a sizable amount of revenue in these jurisdictions comes from the offshore services industry, these countries work very hard to uphold the reputation of their respective jurisdictions. Incidentally, you'll discover the offshore management companies run a much more thorough background check on you than you will on them. They want to make sure that they are doing business with reputable individuals operating with legal sources of funds. Maintaining their licenses depend on it. Now, what you will find is that when you have a legal emergency and you want a Nevis LLC provider to come to the rescue, they do not manage your assets for you directly. Just like a managed investment account in the U.S., they assign an investment professional at a money management firm to invest your money for you with your guidance. So if you need to have a trustee step in as manager of your Nevis LLC, they employ a bank's investment manager in Switzerland, for example, to handle your investments. The investment firm will typically contact you, propose a portfolio, and then seek your input. So, like U.S. managed accounts, you let the manager know your risk tolerances and the institution will come up with a proposal for you to approve within the Nevis LLC. So you can have them choose the appropriate mix of stocks, bonds, precious metals, and/or interest-bearing investments to meet your comfort level. In the case of Switzerland, a banker from that jurisdiction will eventually fly to meet with you in person when he or she are in the area making visits to clients. You will have online access to your account so you can check your investments. You may also receive paper statements and investment confirmations from your Nevis LLC account if you request them. In addition, you can simply do the trade yourself online. Okay, now let's talk about 20 advantages of the Nevis LLC. Number 1, the company is protected from seizure by a judgment creditor. Number 2, the assets inside of the company are also protected from a judgment against a member. Number 3, the 2015 amendment requires a creditor to post a bond of $100,000 before bringing any action to collect a judgment against a member of a Nevis LLC. Number 4, exempt from Nevis taxes. Now keep in mind, U.S. people are taxed on their worldwide income. Number 5, inexpensive initial formation and annual maintenance. Number 6, can be established within 24 hours. Number 7, can operate a business in the U.S. or other jurisdiction. Number 8, does not require paid-up capital. In other words, you don't have to deposit a lot of money in a bank account before you set up the company, unlike some other jurisdictions. Number 9, a charging order is the only remedy for a Nevis LLC. And that means they can put their clamps on the outside, but they cannot get inside the company to the assets. Number 10, in other words, they could theoretically take distributions if they could, but nobody can force you to make them. Therefore, they do not receive them. Number 11, the one with the charging order has to pay taxes on the LLC if they're a U.S. person. Number 12, single-member LLCs are legal. Number 13, single-member LLCs receive the same asset protection benefits as a multi-member LLCs, unlike most LLCs in the U.S. Number 14, members or owners and managers, those who run the company, are not filed in the public records. Number 15, a manager of the LLC can control 100% of the company. Number 16, a manager is not required to be an owner, yet can control 100% of the company and its assets. Number 17, a person or legal entity from any country can be a manager or member. Number 18, there are not any foreign exchange controls. Number 19, a Nevis company can merge with an LLC from another jurisdiction. In other words, a U.S. LLC and a Nevis LLC can merge to become one. And number 20, a U.S. corporation or LLC can convert into becoming a Nevis LLC. Nevis LLC legislation. The Nevis LLC is created under the Nevis Limited Liability Company Ordinance 1995 and as amended in 2015. The statutes were originally based on the company statutes in the very favorable U.S. state of Delaware. Now, the Nevis Limited Liability Company Amendment Ordinance of 2015, or the ordinance, was enacted on July 1st, 2015, and there were two major asset protection revisions. First, there was a restatement of the section dealing with charging orders. And second, there was a new section added regarding fraudulent transfers. The main change to the charging order section is that the charging order is the sole remedy that is available to any judgment creditor, including a bankruptcy trustee. That is, whether the Nevis LLC has only one or has multiple members, Nevis courts will not allow seizure of the LLC or the assets held therein. Moreover, the charging order is not allowed to include amounts that arise from fines, penalties, or punitive damages. The charging order against a Nevis LLC is not considered a lien on that member's interest in the company. The one who has the charging order may not jump in and become a member. So the original owner retains his ownership. They cannot exercise the rights of any member. The holder of the order cannot interfere with any management decisions. They cannot liquidate or seize any assets of the company. They cannot restrict the company's activities, and they cannot dissolve the entity. Unlike a U.S. judgment that typically lasts for 10 years with a 10-year renewal, that is for a total of 20 years, a Nevis LLC charging order is not renewable and has to expire after 3 years after the company is filed. Moreover, the company can continue to seek additional investments from its members and can hold on to the distributions that would usually go to the charged member. In Section 43A, a new statement was added dealing with fraudulent transfers into the company. This section addresses creditors who try to seize assets that a judgment debtor has transferred into the company. Taking after the Nevis and Cook Islands Trust Law, this section says that a creditor needs to prove beyond a reasonable doubt that the reason for the transfer was to defraud that particular creditor and that the member thereby was made insolvent. Moreover, the calculation includes the entire fair market value of the member's interest in the LLC. So if the fair market value of the member's assets were greater than the amount of the creditor's claim when the transfer was made, the courts do not consider the transfer to have been made with fraudulent intent. In summary, unless the client says, yes, I put my assets in the Nevis LLC in order to keep them away from you, Mr. Creditor, and gives some other legitimate reason for moving the funds, the reasonable doubt statute should suffice to prevent a charging order against the LLC. Even if a creditor receives a charging order against the LLC, the statutes state that it is virtually impossible to obtain company assets. The sooner one puts assets into a Nevis LLC, the better. The reason is that there is a 2-year statute of limitations for a creditor to file a claim against a member's interest. Even more painful for the one filing the lawsuit, a creditor is required to post a $100,000 cash bond up front with the courts before filing. So the Nevis LLC statutes are riddled with multiple barriers to prevent creditors from getting to a member's assets. Thank you for watching. And if you'd like to talk to a consultant about setting up a Nevis LLC, please feel free to call us at 1-800-959-8819 or internationally at 1-661-310-2929 or complete the free consultation form on this webpage. Thank you.